Today is the 18th. Hopefully, you had a great St. Patrick's Day. And I know that it was beautiful out here in California. Little cool in the morning, but then finally got up to like 73 and sunny and just gorgeous. I was running around with my dad yesterday. He's all good. Got back here about 3:30 after the markets. Looks like the markets held up pretty nicely yesterday. You can see the markets are rolling right through kind of my excess phase peak pattern, flagging formation or consolidation formation. Remember, we are in consolidation and we will likely stay in consolidation at least out here through very late April, May. So I'll make this a big point here. You need to understand that we are in consolidation and will likely stay that way for at least another 35, 45 days. Really, I kind of think we're going to get into the breakdown out here in June. So I think we really start to move down out here. I'll try to draw that in a kind of a breakdown mode here. I think we're really looking at kind of a breakdown out there in late June, which gives us a pretty good indication that, we've got some rotation to go here before we get into any kind of a big breakdown mode. Now, ideally, if we get into this this downward flagging formation that I expect, we will get some volatility back out here in June. So be aware that, we'll move into some volatility here and then maybe break down a bit. So not out of the woods yet, but we're going to have some really good trends here. You can see that we're moving into, a moderate uptrend that I told you about 5.5%. Then we move into a downtrend. Here, I'll just do it this way. Potentially about 7%. Then an uptrend of about 6%. Then a downtrend of about 6%, 6.5%. Then an uptrend of about 4.5%, 5%. Then a downtrend into this lower channel, I think is going to hit about 5% with a little 1-2% blip up here. We're going to have a pretty good little roll. And I think it's going to be great for traders. In fact, today, I think the markets are going to, I'll come back in here to hourly or 2 hour and show you. Today, I think the markets are going to move in kind of a consolidated roll. So we're going to open a little lower, gap reversal, and climb higher, in my opinion. So we're going to get this nice little roll and try to climb higher, maybe up above, 774, 773, somewhere around that area. That's what I believe is likely to happen today. And then tomorrow we have a topping pattern setting up in trending mode. And I believe that topping pattern will set up a peak somewhere up here and roll. So maybe 2 hours. Got to do these a little tighter. And then a topping pattern up and a roll. And that might put us up into the 580, 581 kind of area. Okay, so we're really looking at a push here, maybe up into the 575, 581 area over the next 2 days. And this is where I would be rolling over into a expected downtrend. So understand that at this point, you should be rolling into what may be a downtrend here and preparing for that rolling topping pattern, in my opinion. Okay, QQQ, no, I don't want to create an alert. QQQ is running through the same type of a setup. Again, we could end up, this is a 2 hour chart with kind of a rolling top here, rolling up into this, and then moving tomorrow into a peaking pattern. We are rolling into that early stage consolidation. We do have that reversal, gap reversal and counter trend mode, and a top to the upside tomorrow. We are still in bearish, general bearish trending. We're going to probably stay that way until we at least get out near this top. We'll see how things play out. Remember, longer term, guys, no matter what we really look at here, if my analysis is correct, which I tend to think it is most cases, not always. I mean, I'm not perfect, but we're in this consolidation phase. And the question is, at this point, are we going to end up in this downward sliding consolidation, downward wedge, or are we going to end up totally horizontal? So if we are horizontal, we're going to look at a consolidation level like this, completely horizontal, setting up a range maybe up here. So remember, if we're completely horizontal, we're going to be in this channel, this blue channel. If we are in a downward sliding flagging formation, then we are going to end up in possibly this mild downward drift. Consolidation periods are generally pretty flat. So, even a moderate downward slide, I don't expect it to be anything excessive. But what I do expect then is out here in that June area, and I'll draw this back over here. In fact, I'll draw this up here. Back into that June area right over in here where this green line breaks down, that's kind of where I expect the trend to weaken. So, I mean, if I were to come back over here and try to redraw this is actually pretty good, but right in this area, this is where I think we're going to get that breakdown trend. Kind of right in that area. So it makes sense to me that, we've got this rolling, peaking formation here to the breakdown, and you can almost see it. Almost. So from the time we hit the peak until the time we break down, it's basically that. So from the time we hit consolidation, initial consolidation, until the time we break down, puts us at May 28th, roughly. So understand that this is the same time frame as this consolidation out into this breakdown around June 12th. I figure basically a little bit, it looks like the same block to me. Very similar consolidation block before we get into a decidedly breakdown trend. So we'll see. Again, we will see. Again, at this point, like I told you guys, I'm teaching you what I see. I'm trying to share with you knowledge and experience that I have. Remember, I've been studying the markets, following the markets, and actively in and out of trading many, many times since 1986, 87. The long and short of it here, guys, is, why I'm doing this is to try to teach you to become better traders, to learn to see what I see. And then we will see how things play out over here. I don't see anything big on this daily chart in terms of an excess phase peak pattern. I'm sure there's going to be some. I'm sure if I went down to 5-minute or 10-minute, I'd find something. But right now, we're playing through this exhaustion sideways consolidation pattern. And I am still expecting the markets to try to come up, in this case, the QQQ, to move up into the 490, 494 area in the next 24 to 48 hours. Just like we have the SPY attempting to move up into this 577 to 583, 84 area in the next 24 to 48 hours. Okay? And that'll put us right below this roughly 50% level, right up over in here. We should run into resistance right over in this area and then start to roll downward into that lower channel. All right, gold. Gold is making a nice little melt up. This is the 1-hour chart. I'm going to go to 2-hour. Gold is making a very nice little melt up. Silver over here is again making a very nice little melt up. Let's get rid of some of these back over here. I had kind of expected the uh, silver and gold melt up to follow these lines, okay? And you can see where we're at. We kind of predicted a rollover and then an upward trend, a pullback, and then a rally. Now, I don't know if we're going to get the pullback the way gold's moving. I think that there's a lot of hedging going on given what is taking place in the world. And just saw the other day that the Chinese central bank dumped a ton of money into their economy trying to stave off a recession. So, the Chinese are off doing essentially money printing to try to keep their economy rolling. And what I do believe is going to happen is we're going to see gold move into a very aggressive upward move here, possibly with silver doing the same thing. And I think we're going to be looking at, again, as you can see my crazy drawings. All right, let's get rid of some of these. But I mean, ultimately, they all play out pretty well. I'll leave those levels there. And, I'm looking for gold to make a move up above that 3,200 level. In reality, guys, I think that we're targeting this 3,400 level right up in here very cleanly. And I believe that's really where gold wants to try to rally. Now, silver, on the other hand, wants to try to go up to about this $40, $41 area. And when I say wants to, I think that's going to be more the next big major move. Okay. So what we're looking at here is about a $300 rally in gold. Let me check. Maybe four. Yeah, about a $300 rally in gold. And we're talking about nope, go away. A 16, sorry. Let's try that again. That was percent. A $5.40, $5.50 rally in silver. Now, how this is going to play out is this is going to be the next big resistance area, which will pause the markets. We come back here to daily. Come back here to daily. And remember, this move that I am projecting for gold and silver, making this big rally up over here to this $41, $42 area for silver, that's going to be a pause. It's not going to be any major top. It's just going to come up to this area, pause out a little bit, and then try to rally probably up into the $48 area. Another $4 or $5. Gold will rally up into the 34, 33, $3,500 area, pause out a little bit, and then try to move up into the $3,750, $3,800 area. So, and I think this is all going to happen like before the end of May, early June. So give you an idea here, this is drawn incorrectly. I think you're going to be looking at a very aggressive rally up into this area, and then another big rally up into this area, possibly a little higher, before the end of May, June. So I think you're looking at really, 35, 45 days, and you could see a very solid upward rally of about $800 in gold and about $10, $11 in silver. So I personally believe this is in a very aggressive upward move. I just didn't expect a big upward move this week. I think we really get into aggressive trending after the 21st or 24th or 25th. And we'll see how that plays out. Okay, so did I show you gold? Nope. Gold is setting up a top resistance pattern. Then we move into consolidation tomorrow. Then an inside breakaway. Then we go into next week with an inside breakaway, Harami pattern, inside breakaway again, pop pattern in counter trend mode. Should be pretty interesting. But all of this to me is melt up. Inside breakaway could be pretty big bars. top resistance, should be moving up to find a top today, a resistance area, then we stall out. But this pop pattern could be a big move, either up or down right now. It is in counter trend mode, so I would say to the downside is more likely. Not a big breakdown, but could be a pretty solid pullback on some news or breakdown in the market. And then we'll come over here to Bitcoin, which is down 1,500. Where's the rally, Brad? Well, I don't know. Let's see what happens today. If we do consolidate into this channel, this would be a pretty big consolidation. If we never get up into this area, reaching this upper channel, this could change my analysis. In other words, we could be looking at a much tighter channel back over here into this area as kind of a high, breaking, setting up a potential breakdown here in Bitcoin, rolling more so towards the end of March and into early April. So we'll see. We'll see what we get here. We'll see if we get any upward trending. Bitcoin kind of does its own thing sometimes. You see how it topped over here long before the actual markets did, but still rolled over. We'll see what happens here. If the markets go up a little bit, Bitcoin might rally a bit more. I still think the 88,000 level is a decent target. Obviously down here, this 77,700 roughly area acting as support. So we're in the consolidation phase here in Bitcoin as well. And that means that, I'm not expecting a whole lot. I'm not expecting a big trend. I wouldn't, someone came to me and said, Brad, do you think Bitcoin's going to get to 120,000 in the next 30, 40 days? I'd say, no way. At this point, there's literally like less than a 3% chance that's going to happen. If they came to me and said, Brad, do you think it's going to get to 50,000 in the next 30 or 40 days? I'd say that's a slightly higher potential, given the fact that we're in a downtrend, we're in a downward excess phase peak pattern, we're in consolidation, and we're waiting for an ultimate low to set up. So yeah, you probably got a 25, 30% chance that maybe 40% that it's going to get down to $65,000, $50,000. Brad, do you think it's going to trade between 76,000 and 90,000 for the next 30 days? You betcha. That's almost 100% guaranteed. It's going to trade within a range, probably somewhere between 77, 78,000 and 91, 92,000. That's give yourself a quick calculator. It's about 14 grand range. It should trade within that range for the next 30 plus days, attempting to break downward as I've drawn over here. And if we do break downward, this is the most likely outcome right here, given where we're at. This red line is the most likely outcome. Given where we're at, we've got about 20, 30 days of sideways rotation and about an $8,000 to $14,000 range here. Then we should break down into the ultimate low, setting up a low. And then honestly, the way Bitcoin works, we move into this ultimate low. We could either consolidate. So let me explain how this works. With the ultimate low, and remember, with Bitcoin being what Bitcoin is, if we get into this ultimate low down here, and then we roll into any consolidation, we could either A, roll through many, many months of consolidation, past the lows before we start seeing some growth. Or, as I drew here, we could roll down into this move, rally back up, set up an excess phase peak, another one, break down into consolidation into this level again, and then break down to a deeper ultimate low. So, Brad, what are you saying? Okay, what I'm telling you is these excess phase peak patterns are what sets up the market. So you see how we ran through an excess phase peak pattern here? We had support. We broke below support. We then moved into consolidation. We then broke consolidation support here, moved down to an ultimate low. That ultimate low is going to set up a support level. That support level is either going to act as support and drive an upward trend, which may take many months to play out, or it's going to roll up, turn into an excess phase peak pattern, potentially trying to set intermediate support back over here, and then break down into consolidation again before breaking down to try to find ultimate support again, maybe down in this area. So it's really interesting how everything plays out, because you can play kind of an A, B, maybe C condition. What would be the C condition, Brad? Well, the C condition would be that we reach our ultimate low down here and then just rally the heck back out of it. That would be the C condition. So we really have, three types of outcomes here. We have make this blue, the blue outcome, which is an extended basing bottoming pattern. We have the red outcome, which is an immediate bounce off the ultimate low level near 55,000, and potentially moving into a secondary excess phase peak pattern, setting up a deeper low down here. That's the red level around 34,000, potentially 33, 34,000. Or C, the green, the ultimate low settles, prompts a big rally, and we try to make a new all-time high, which will be $115,000, $120,000. Now, we could, again, break out as of this consolidation. Whenever we get into this consolidation range, we could invalidate the entire thing on a very strong rally to the upside, breaking above this high. It could happen. That's what's called an invalidation phase in the excess phase peak pattern. So in reality, guys, I'm giving you kind of the long term. Look at how I've drawn months out into advance. I know what to expect. We should be breaking down into this low, or we're going to invalidate and then come back up here. We haven't seen any invalidation, any strong upward trend yet. We're moving directly into consolidation, moving right into this pattern. We've probably got a 60 or 70% chance or more right now that this is going to happen in the next 35, 45 plus days. And once we do, then we move into this either A, B, or C mode. But guaranteed, this ultimate low is going to prompt a little bit of a bounce. So once we get into this ultimate low, you're going to get a little bit of a bounce, maybe up to 70 grand, maybe up to 65 grand, maybe up to 80 grand. But from this $58,000, $60,000 low, that's a good $20,000 bounce in Bitcoin. So pay attention. That's why I'm trying to teach you guys. All of this stuff is, pretty clear to me. I'd love it if it became really clear to you as well. Okay, let's go back here to SPY. And remember, we're in the same pattern. I've got a lot more drawing over here, but we're in the same excess phase peak pattern into consolidation, looking for that ultimate low. And as I've shown you, that ultimate low could be down here in the 470 area to 510 area. That would be a very shallow low. We're looking at this ultimate October 2025 base over here. That's where I think that we're going to eventually run into the secondary low that's going to start the big rally. And then again, at this point, we could move into a secondary excess phase peak or continue to move higher. We just have to be very cautious of how this is playing out. This is a trader's market. And again, I will be looking to try to move back into potentially, and I'll put it here, potentially 100% allocation at this level. So understand that we are going to be looking to maybe guys move into more 100% allocation right over here. We've been at 80 to 85% cash since back over here. I still am maintaining a very low trading allocation, mostly in cash and metals, trying to protect against hedging against this downside risk. Once we set up over here these lows, I would be looking to maybe move us back into more 100% allocation back into markets. We have to see how this whole thing sets up over here. Okay, guys, today, remember, is a gap reversal in counter trend mode. I believe the trending bearish is going to be a gap reversal back to the upside. I showed you So again, back here, if I were to give you a clear hint, I really think that we're going to be kind of looking at this kind of a rollover. Early morning, a little bit low, maybe a little consolidation low, and then a nice rollover melt up to the upside. That's what I believe we're going to be looking at today. Then a carryover trend tomorrow up into a top, which could be early morning on news Wednesday, and then we potentially roll over after hitting a high on Wednesday. Okay, guys, go get some.